Every month, there are hundreds of thousands of people searching the internet for phrases like stocks to purchase today, best stocks to buy, and top stocks for 2022. Here are 8 stocks to buy and hold forever. Number 8. Alexandria Real Estate Equities Incorporated. Within the context of the history of specialized research campuses in the United States, the city of Alexandria was one of the earliest operators in the domains of life science and technology. It is structured as a real estate investment trust, and the places that it refers to as innovation clusters are its core area of concentration. These areas are often placed in close proximity to prestigious university institutions and metropolitan talent hubs. It has around 50 million square feet of space spread across the country in excellent locales such as San Francisco, Boston, New York, and Seattle, amongst others. As a consequence of this, the company's stock is in a stronger position to withstand more cyclical real estate investments that are reliant on the level of consumer spending. In addition to this, it shields it from the shifts in commercial real estate trends that have been generated by the rise of telecommuting for white-collar employment. These shifts have been caused by the rise in popularity of working from home rather than going into the office. The fact that dividends have increased from 51 cents quarterly in 2021 to $1.18 at the present time, representing a surge of 130% over the course of the previous 10 years, is evidence that it has the potential for long-term growth in dividends. This potential has been demonstrated by the fact that dividends have increased. Number 7. Campbell's Soup Company. In addition to the soups that bear the company's name, Campbell also manufactures a vast assortment of other well-known consumer goods, such as V8 drinks, Pepperidge Farm baked goods, Snyder's pretzels, and Pop Secret popcorn, amongst many others. Since its founding in 1869, the company has shown that it can weather a variety of various kinds of economic storms with ease, proving that it is resilient in the process. In the end, it doesn't matter how awful things are for the general stock market or for consumer spending. The fact that we all have to eat won't change regardless of what happens in the stock market or with consumer spending. Because investors are fleeing to safer, risk-off stocks like this one, the share price of Campbell's Soup Company has managed to post a little gain from the beginning of 2022 till today. It is projected that the stock will continue to generate consistent returns for a considerable number of years into the foreseeable future. Number 6. Amcor plc. Have you never come across the company Amcor in your life? It's possible that the time has come for you to educate yourself about this low-risk investment that pays dividends and has a long-term perspective. Amcor is a company that specializes in the manufacturing of a wide variety of packaging products, such as pouches, containers, cans, bottles, and jars, among other options. The task is not very fascinating, but it cannot be avoided due to the vast range of industries in which the company's products are employed. These industries include the beverage industry, the medical industry, the personal care industry, and a number of others. Because of this, it is possible to have a large consumer base, which ultimately leads to growth that is slow but consistent over the course of the longer term. For instance, the company is considered to be a dividend aristocrat, which indicates that it has increased the amount of money it distributes to shareholders at least once each year for the past 25 years in a row, thereby demonstrating a commitment to the shareholders over the course of the long term. Number 5. Cardinal Health Incorporated. Cardinal Health is a stock that has a low degree of risk and is in the business of supplying goods and services to organizations that are engaged in the process of providing medical care. These organizations include medical offices, nursing homes, and surgery centers, among others. This includes the provision of needs such as medical supplies, laboratory products, personal protective equipment, bandages, and other necessities which may not have large profit margins but definitely serve an enormous need. This $15 billion healthcare player has been able to sustain a constant revenue stream as a consequence of this, which has resulted in 35 years of consecutive dividend increases. Because of the company's strong collaborations with healthcare facilities and its business model, which does not run the risk of being disrupted by therapies or technology of the next generation, it is a stock that should be purchased and held for the foreseeable future. Number 4. Consolidated Edison Incorporated. It is possible that it is not the most actively traded utility stock on the market, but it excels the majority of its rivals when it comes to its capacity to keep its value over the course of a long period of time. Within the metropolitan area that encompasses New York City, it distributes electricity to approximately 3.5 million residents and supplies natural gas to an additional 1.1 million customers. This customer base is not susceptible to change, despite the fact that the demand for energy in certain regions of the country may be more unpredictable than in others. It is not only one of the oldest publicly listed utilities in the United States, but it also has a track record of increasing the dividend payments it makes to stockholders at least once every year for the past 48 years. This accomplishment is a testament to the company's strong financial performance. It's likely that there are other stocks in the industry that have larger market capitalization or offer higher yields. But this is the kind of stock that you might want to buy and keep for the rest of your life if you can afford it. Number 3. Merck & Co. Incorporated. Merck has been one of the greatest performers thus far in 2022, with gains of more than 15%. This is despite the fact that the rest of Wall Street has been struggling. Nevertheless, this big pharma firm is not only looking terrific in the short term, it also has considerable long-term potential, and investors should not disregard it because of this. Merck's portfolio of multi-billion-dollar blockbusters includes both the cancer treatment Keytruda and the diabetic medicine Januvia. Both of these products are manufactured by the company Janssen. In addition to this, it is in the process of negotiating a deal to purchase Seagen Incorporated, a cancer biotech business situated in Seattle, for the sum of $40 billion in order to further fuel its expansion. Because the dividend has increased from approximately 40 cents per share each quarter in 2012 to 69 cents, and the payout has continued to rise since then, patient long-term investors who hang on to this stock have an excellent track record of dividend growth. This is because the payout has continued to rise since it began increasing in 2012. Number 2. Unum Group. The worldwide insurance provider and benefits provider Unum has its headquarters in Tennessee. However, the company's services are offered not only in the United States, but also in the United Kingdom and Poland. The provision of group insurance, including disability, life, dental, and vision coverage to enterprises for the goal of improving the working conditions of their employees, makes up the vast majority of the company's activities. Due to the fact that Unum has been able to amass a vast amount of experience in this sector ever since the firm was established in 1848, not only is it an exceptionally safe industry, but it is also one in which it excels. The dividend payments just barely increased by 10%, reaching 33 cents per share, which is about 3 times as much as the 13 cents per share that were distributed in 2012. A dividend growth of this kind is precisely what you should be looking for when it comes to a holding that you intend to keep for the long term. Number 1. Altria Group Incorporated. Altria is the manufacturer of a wide variety of tobacco products, including cigarette brands such as Marlboro and Black & Mild, which produce pipes and cigars, as well as smokeless tobacco brands such as Copenhagen and Skoal. Customers aren't exactly in the dark when it comes to the dangers of tobacco because studies on the subject have been published for decades. This is despite the fact that these products aren't exactly ideal for your health. And from an investment point of view, it has maintained its track record of generating steady low-risk returns for a number of years, including an exceptional history of more than 50 dividend increases over the course of the last half-century of its existence. However, the company's strong management and solid balance sheet may imply that the current pullback represents an excellent opportunity for a long-term investment in a stock that has staying power. Recent difficulties with the company's investment in Juul, a maker of electronic cigarettes, have resulted in a drop in the stock price. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.